You're now locked in with your favorite DJ, DJ Styles. Follow DJ Styles on Instagram, Facebook, and SoundCloud at DJ Styles Music.
When every hand raised, we become one race. It's only one stage. This is the birthplace.
Hey yo, DJ Styles.
Look where we are. Greatest carnival. So magical. It's a blessing sent from above. And we go jump till morning. Look, the moon gone sleeping. Tell them we not leaving. Till the last drop of bacchanal is madness in the capital. So I feel like I run in tongue again. Jump and shake the ground again. We're with all my friends and them. No place like home. 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 I feel like I run in tongue again. Jump and shake the ground again. We're with all my friends and them. No place like home. 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 Now is the time for it to jump on somebody. Hand up in the air. Madness everywhere. It didn't with DNA. To get on bad when we on the roadway.
Okay, amazing day. Danny, big up Danny D remix. And you know I hate playing other people's music when I got Danny D. Yeah. So listen, where you got? And you gonna put on YouTube?
Nah, not yet. I'm gonna start
YouTube
posting
you, bro. I'm not gonna lie to you. I'm looking if I can see bare replicas, bro. Bare Chinese made. Like,
I've got a question.
Go on.
After, sorry, I'm doing a charity event sometime next month to raise some money for the people of Grenada and Caribbean.
Sick.
Danny, you want to do a little set down there, please, brother?
Yeah, where is it and when?
All right, I haven't set the date yet, but it'll be in Hammersmith.
Okay, cool. Well, let me know where and when.
Yep.
And then, yeah, I'll let you know. Once I'm available to get out there.
Thank you. I'll get in touch.
I like to see that unity, you get me? I like to see that unity. Yeah.
Bless up. Amazing day, everyone.
I mean, I'm a bit insulted that he didn't ask me for my DJing skills, so I'm just taking that personal, obviously. You know what I'm saying, Danny? I taught Danny everything he knows.
I mean, I wouldn't go that far. However, I'll give credit where it's due. He is entertaining.
All right. So look, guys, amazing day. Yeah, we don't say good morning again. It's amazing day because, you know, for a start, nobody didn't dead. So we're
Grand Rising.
Yeah, or we say Grand Rising, yeah. But I'm with amazing day because I want the whole day to be fantastic, yeah. Not just the first part. Man who turn around and say to you, good morning. What happens at 11:59? Yeah, what happens then? Yeah. So let's keep it stepping. We're gonna have a great day. We're looking at different markets, and yesterday we went through some stuff about different in regards to sessions, understanding the sessions, and understanding plays that come from the sessions. All right, understanding liquidity. We're going to do some more on that in regards to liquidity and understanding the sessions, etc. Okay, and we looked back and we was doing some back testing and we were showing how these markets go reach up and grab liquidity. I showed you a couple indicators. Not that I trade with indicators. I'm purely, if I was to say the style of trader that we are, is I'm a market structure and price action trader. But the reality is that in Unity, we don't teach people a flex. Yeah, it's not like a flex. Like if you do this and this, you might be able to catch a one-to-one. Well, say that changes. You know, say the markets change, say something changes. Say that the win ratio, which is normally 6 out of 10, drops to 3 out of 10 for some reason. The bottom line is about knowing how to trade and understanding the markets, understanding how they move, why they move, and trying to take high probability trades. The bottom line is that knowing what a high probability trade is probably the starting point. Like, do you know what a high probability trade is? If you don't know, how can you take one? All right. So we are looking and we are breaking down and we are combining our knowledge of the markets. We are understanding how the markets move away from a zone, creating imbalances. We are understanding how relatable all strategies are. Okay. So what do I mean by that? I mean, there's one God. Okay, it doesn't matter what you call him, doesn't matter how you look at him or her or it, the universe, whatever it may be, just know there's one, all right? Or they're all the same. Maybe that's a better way to say it, okay? So whether or not you're Muslim, Christian, whatever it may be, these move the same. If you want to turn around and call it an imbalance or a fair value gap or an inefficiency, that's your business. They are all the same, all right? Because the markets are going to do the same thing, but you need to see it a certain way. All right. I teach it in a certain way I believe is quite a relatable, down to earth way. I try not to overcomplicate things, but I try to teach it from the perspective of understanding these markets. Okay. And being able to look and see it. Now, understanding technical analysis is easy. Let me say it one more time. Technical analysis is easy. But what people don't understand about trading is probably about, I don't know, 30, 40% understanding the technical, your edge. The rest of it is being able to be disciplined, your psychology, how you work it into your life, whether or not you have a little bit of luck, okay, behind what you was doing. But that doesn't mean that you luck within your strategy. Just luck maybe to get going, maybe luck to get that big win that gives you a flow, that allows you to have a 50K account, 100K account. Who knows, okay? The reality is that it's about being ready, staying ready, so you don't have to get ready, all right? So ultimately, for example, once upon a time, the crypto, market exploded. And because a lot of people were not ready, they went and bought cryptos, not having a damn clue what they was doing. All right. They were just like, oh, it's cryptos. I heard that this, 17-year-old made X amount of money from cryptos, and they just hit the button and they just bought. They just said, how do you open this account? They went to wherever it was, Coinbase, and they started buying cryptos like a maniac, not knowing what they was doing because they wasn't ready. They didn't understand anything about the markets. They didn't know that they was buying Dogecoin at an all-time high. They didn't know that they bought Shiba Inu when Shiba Inu was, just about to dump. They didn't know. All right. So what we do is we understand the markets. We get our education up financially, our financial literacy. That when the opportunity comes, i.e. you come into some money, i.e. you got a bonus, i.e. Somebody sells a home and they're thinking, what am I going to do with my finances? Or you want to invest in the markets. And instead of you just going blindly and invest in the markets, you can actually look at the charts and make a discerning decision. That's what this is about. Okay. If you're able to learn and understand and get yourself into trading, into the zone of saying, okay, you really want to trade and you really throw yourself into it and you make money straight away, well, fantastic. That's great. Okay. But some people, that's not their story. Some people, their story is about education. It's about understanding. It's about getting comfortable, okay, with being in this uncomfortable space about what's happening in the world, what's happening in the economy, etc. Because I'm telling you, you go bump into your brethren who knows about every single rave that's happening this weekend, ask him what's happening in the world. The world that he lives in, say, do you know what's happening in this part of the world? Do you know how it might affect you? Have you done this? Have you done that? Do you have this insurance? Yeah, he doesn't have a clue. So we have to start recalibrating our brain for things that are going to do us, what was the saying? The saying was, it's easy. This is what the saying was. It's saying it's easy. All you have to do is the things that help you in your life and do you well in your life, do those. And the things that that don't do you any well in your life, don't help you, stop doing those. It's that simple. If you sat down and thought about the things that you do every single day, which are good, they're a net positive to your life, going to the gym, eating healthy, smiling, saying good morning to man in the morning. You understand what I'm saying? Yeah. Going for a jog, doing certain things, having good relationships, going and seeing your family members. If you think that is a net positive for your life, do those over and over and over again. See the compound effect of you spending time with your son, or the compound effect of you going and eating healthy or going to the gym, or see the compound effect of that. And vice versa, we all also know the things that are bad for our lives. It's not like we don't know. We know. We know smoking's no good for us. Yeah, smoking cigarette is no good for us. We know that eating McDonald's every single week or day is not good for us. Yeah, we know that never getting up to do any type of physical activity ever, yeah, until we've got to walk, do a brisk walk for the bus or the train or wherever it may be, is no good for us. Keep doing those bad things and see the compound effect of those things. So you not understanding money and not knowing how to grow your wealth, not even having an inkling of how to grow your wealth, how can that be good for you? How could you mush through life like that and think yourself it's somehow going to be good for you? Because let me tell you something, the people that are successful, making money hand over fist, billionaires and millionaires, what they understand is about this thing that is called money. They understand how to use it like a tool. Where everybody else, or the majority of other people, are out here working for money. Those who understand and have some level of financial literacy are trying to make their money work for them. And it sounds like a cliche statement, but let me tell you something for free. You're not going to work out how to make your money work for you by the Lord, like you're just going to walk outside and you're going to get hit by lightning, the lightning of knowledge that's going to tell you how to do it. It's not going to happen like that. You're not going to be able to pass that information on to your son or your daughter by magic. You're not going to wake up and magically you're going to be able to tell them what they should do with their Holy Communion money. what they should do when they've been, grandma left them this. You're not going to be able to help. So what good are you? What good are you if this world is about finances? You need money to live. Let me get deep on you. You need money to live. You even need money to die in this world. Can't even die without money. So if you're thinking about dying anytime soon, don't die. Yeah, you can't even die without money. Yeah, because someone's gonna have to pay for the burial. So if life is about money and not only about finances, don't get twisted. Of course, there's other things. There's spiritual awareness. There's health. There's family. There's mindset. There's well-being. Yes, there's lots of other things. But let's just get to money first. That's what it's about, and that's what most people are chasing every single day. You're not taking the time to be on a breakfast call this morning, or to engage and ask questions and think about how you're going to grow your wealth. Think about a business. Think about how you're going to say. Maybe you don't want to do business. Maybe you want to work for you. That's fine if you want to work. Not everybody's out here trying to be Jeff Bezos. But when you get your money, how do you grow it? Where do you place it? Does it make sense you buying a property in this way or that way? Have you thought about a trust? Have you thought about what happens when you die? If you're not even trying to work out that, and that's the thing that makes the world go round, what are you doing? It's the question you got to ask yourself. What are you doing? Why not? Why did you prefer to watch Love Island than find out how you and your kids could make sure that they can exist in this world? That's the question. All right. Well, guys, good morning. God bless. Let's get into it. All right. Or amazing day. Sorry. All right. See, bad habits. All right. Bad habits. So amazing day. All right. So let's get into it. I'm looking at XAU USD. XAU USD is the forex symbol for gold against the United States dollar. All right. And we can see that gold is bullish. Yeah, just from a much larger perspective, we can see gold is making higher highs and higher lows and higher highs and higher lows. Okay. And at the moment, the market is ultimately bullish, and I've drawn some little ranges in here. Now look, understand that these lines that I draw on my screen are not when the market hits these lines, we just hit the button like we're playing Snap. You hear me say that every single morning, because I don't want anybody to get confused that our strategy is about drawing some lines, and when it gets to the lines, we hit the button. No. These lines are doing the same thing that a fancy indicator, for example, like a relative strength index, would be doing on your screen. A relative strength index, which we was talking about this week also, an RSI, would be showing you when the markets are overbought and oversold. Have a look. These two lines, typically 70 and 30. All right. Obviously, there are many RSIs created by random people. If I put an RSI, because this is open source, anyone with a brain cell can put together RSI if they wanted to, and they can upload it here to TradingView. All of these different people here, you see, look, Harry Potter, this guy, Mr. Moser, all these people have created RSIs. But typically people, and they have different variations of them. Some people might throw in an EMA on top, some people might do this, some people might do that, who knows, okay? This one, typically you'd see these bands between 30 and 70, 30 indicating when the market is oversold, meaning it's in a discounted area, oversold. And then this line over here, which is going to be around about our 70 line, and this normally ranges between 0 and 100, would be overbought. Now, this indicator, just like anything in these markets, does not tell the future. Yeah, it isn't some magic, yeah, that when it goes up there, the market's going to have, but it's just showing you what the market has been doing within a range, and therefore at the top of any range is expensive and the bottom of any range is cheap. And the way I like to explain it to people who've never been on one of my sessions before is this is no different to what we do in life. Just because we're looking at this in its lines and zigzags and thinking, oh my God, I haven't grasped this, I'm never going to get this. This is the same as life. Nobody's going to go to the market or to the shop or wherever you go to go and buy your clothes or your food or whatever it may be. And you're going to be saying, I've come here looking for the most expensive, I don't want to buy the trainers at at the cheapest price. I'd like them at the most expensive price that they've ever been. I don't know anybody who does that. Doesn't matter how much money you've got. I'm sure that when you go to the shop, you're looking to say, okay, boom, the trainers are normally 150, but for some reason today they're doing it for 75. They're closing down. I need to buy two. You want to buy things when they're cheap. And vice versa, if you're thinking from an entrepreneurial perspective, when something's expensive, for example, you bought a whole box of these trainers at 75 quid, when they get to being 150 quid, you'd be like, okay, I'm thinking maybe it's time I take some profits because I'm doubling up right now. You'd be thinking to yourself, yeah, this is a good time to take some profits. Now, this is what we do when we draw our ranges. Our ranges are indicating an area where the market is overbought, okay? Up here, meaning that it's expensive. think about it. If something's overbought, if lots of people are buying something, the price goes up. It's overbought. And if lots of people are selling things oversold, the price will go down. All right? Because there's lots of them. All right? There's lots of them around. So as you can see here, have a look in our RSI. Our RSI is giving us exactly that energy. Whenever we get at the top of the range in a premium, we see we're up here. Boom, and from there we sell down. Have a look when we get to a discounted area on the bottom of this line here. If you guys can see these two ranges I've drawn. Here, look, boom, we're low, we're right by that 30. Okay, these are all indicators that may help you, but what I'm showing you is without those indicators, if these indicators didn't exist, if for whatever reason this indicator that random person created was wrong, they had a problem with it, which is very, very possible, that you still have the tools in pure price to be able to be your own relative strength index. I know that in this relative strength index, right about here, we're going to be high on that RSI curve. Or here we was high, here we was very low, around the 30. I know that because it's doing the same thing that I can do in my eyeballs. All right. So right now we're looking at this market. Let's go and look at that. I think I deleted it, did I? No, I didn't. As you can see here, as mentioned, we're here very high in this kind of 70 region of that RSI, meaning in a premium of this little impulse. Okay, of this little impulse. Now, the bigger Russian doll, which I teach these markets are like a Russian doll. There is a bigger one, then a smaller one, then a smaller one, then a smaller one, then a smaller one. And they're all contained within each other. The bigger Russian doll is this kind of faint range over here. Can you see? And maybe this market right now wants to keep pushing all the way up and go to that range. I don't know. I don't have a crystal ball. I wish I knew, but I don't know. Now I'm on the weekly time frame, which means every single candle is a week out of your life. Now, nobody here is trading the weekly range. And to be perfectly honest, as a day trader, it's not too important what's going on all the way back weeks and weeks and weeks. It's not too important. It is important to know if you're right up against the potential premium, yeah, or not, okay? However, but it's not the be all and end all. So let's drop our time frame down to a daily. Now, we can see on our daily that our gold XAU USD is doing what? And anybody got any ideas of what they think gold's doing right about now? Does anyone have any ideas about what gold market is doing right now based upon this daily time frame?
Consolidating.
I think so as well. Good morning, sister. Oh, amazing day, sister. Yes, it's hard habits. Amazing day, Grand Rising. Lovely to hear you. All right. So this gold is kind of going sideways. Yeah, it's kind of going sideways in this range. So don't get twisted. This is a big range. From this premium to this discount, you could trade that range and you can make loads of dollar. All right. You can make loads of dollar in between that range. Okay. But it is within a range. Okay. It is definitely trading within that range. Okay. So let's have a look and see what's going on when we get closer. We can see this market pushed up here, came down, made this higher low, and then made this ever so slight higher high over here. All right. If I was to draw another line in showing the range, it would look like this. Let me make it a color so we can see it. It would look like that. Why does it look like that? Because it's touching the last low before the highest point on this time frame. Now, from there, the market has been trading within that high point and this low point. Came up here, pushed down here to this low point. All right. It actually made a lower low, lower high, lower low. Okay, so you can see the market was trading down like this in this range, but the market's pushed back up here, breaking structure on a daily time frame. Look, it's making lower lows and lower highs and lower lows and lower highs. Then it made a higher low and a higher high. So therefore, it's going sideways in here. All right, and one could turn around and say within that range, you could even say it's going sideways at the moment within this box. If I could give it another slightly different shape. Okay, we're near the premium of that box. And let me show you something near what's going on. Near the premium of this box here, on these two equal highs, relative equal highs, so they're not to the millimeter on the daily, what could possibly be above this level? What could possibly be sitting above that level?
Liquidity.
Liquidity, all right? Liquidity. And liquidity is a draw on price. It's a pull on price, okay? Because the markets like to trade towards liquidity, and we see liquidity is giving the market the fuel to do what it needs to do. And it's what a coinky-dick. If we look up just above this liquidity level and we look left, what can we see? What can we see if we look just above this blue line and look left?
Imbalance.
Imbalance. Sister's on fire this morning, all right? All of these things that Sister's been able to identify allow us as a trader to have some sort of edge and some sort of insight into the markets. Someone else doesn't have a clue, but Sister's thinking to herself, boy, that big daily imbalance might be something that this market wants to go and tap into. Let's drop down to our 4-hour time frame. On our 4-hour time frame, this market is doing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Yeah? What I'm anticipating this market to continue doing what it has always done until it decides to do something else. Let me say that again. I am anticipating for this market to do what it has always done until it decides to do something else. So therefore, I believe there's a very high possibility this market is going to push up into this imbalance. All right. Now, you know, from where we are to up into this imbalance is good pippage. Don't get twisted. I'm on a 4-hour time frame. It's good pippage. All right. Now we're having a look at this market here. Now drop my time frame down further because look, of this range now, once again, we have now fallen into this discounted area. When the market came down here, look, boom, just based upon this discounted concept and this premium, from down here, this would have been a buy. You would have been of loads of profits right now. In this wick, trust me, there is a beautiful indication, correction, continuation on a smaller time frame. I guarantee you it. Okay. Now we're sitting in here. This market is up in here and we're doing a little hokey cokey. The question is, are we going to continue pushing up here to tap into this imbalance, closing this quote unquote inefficiency on a daily time frame? Okay. Or are we going to do something else at the top of this relative little red range that we drew in here? But personally, I think we're going to push up into this area. I think even if this market wants to go down, it's going to push up first. Okay. Let's go and have a look. Knuckle down and let's go and quickly look at something. Obviously, previous day was a bullish candle. Okay. Let's go and have a look at dropping down to our smaller time frame. So on a smaller time frame, you can see all of a sudden all of these things that's appeared on my screen. Now, these things that appeared on my screen is an indicator that I was just trying out, but it's quite good. It's got a lot of options on it. And this indicator gives us all of our session information. All right. Now, some people like to look at their session information based upon New York time. Okay, over here. Some people have it on London time, and it's not too complicated, guys. You can work it out. The bottom line is that you're going to slap on 5 hours. All right. It's that simple. Right now, it's 8:43. And if we look over here, this candle is down here is saying 3 a.m. because I'm on an hour chart. It's 3:43. Slap on 5 hours. So New York is 5 hours behind us. Okay, it's 5 hours behind us. Okay, so we can see here from this indicator when the Asian session was. This was the Asian session. It says Asia on it, gives it away. And it was all the way until the London session. You can see this little yellow block kicked off. Now, one thing we understand about Asia, and sometimes we see as a flex, is if we take Asian highs, sometimes the market likes to have a reaction from taking those highs. All right. So it takes Asia high. All right. And then sometimes we see a reaction, or more times out of 10, we see a reaction that the market likes to react from where it's taking the liquidity above the Asian high. Okay. Now that isn't just the be all and end all of how we just say, okay, well, on that basis, we're just hitting the button. No. All right. That's not the case. Yeah. We still have to look for what we look for. We still have to understand which way the market is trading, etc., etc. Now, on a smaller time frame, even though what I said, I believe this market actually wants to push up in here. A smaller time frame is we understand this market moves in waves. It moves in bullish waves and then bearish waves and then bullish waves and then bearish waves. So let me draw some lines here. I'm going to hide that indicator because it's hard on the eyes. All right. And I'm going to draw some lines in here. So if I drew a line from, say, for example, these lows, tapping into, where the market is touched already here, there's a very high possibility that this market has come from here, and it's made a higher high, and higher low. Maybe wanted to make a higher high, but before that, it might want to have a little retracement first. Maybe a little 50% of the impulse, have a little retracement, and then spring higher. Okay, it may wish to do this. So therefore, when I'm looking at this market, bearing in mind I've got my higher time frame narrative, and I'm also looking at where liquidity may be lying on a smaller time frame. Have a look at liquidity. I made it very clear that anywhere where you see a candle wick, yeah, that either side of a candle wick is a lower candle wick, is that defined as a swing high. Yeah, because it's a swing high on some time frames. So this is a swing high. So this is a swing high. Okay, so at the moment, this little bit over here is a bit of a swing high, and vice versa. We can keep going. Now, every time the market captures a swing high, that's seen as there's liquidity sitting above those highs. Because depending on what time frame you're looking at, a 15-minute structure like this could be looking huge if you're a 1-minute trader. And that's where you place your stop losses above these swing highs. Okay, so I'm looking at this market right now. I have a higher time frame narrative that the market may want to come and capture some liquidity all the way above here, the big prize, but there are smaller prizes. Look, there was a prize above here. And as soon as the market took that liquidity, what did it do? Had a little run in the opposite direction. Okay, and vice versa. When it starts running in the opposite direction, it's trading towards the liquidity. It wants to keep going. It doesn't want to stall out. It needs constant fuel. All right, so it took a little bit of liquidity from over here. When it pushes down here, there is liquidity sitting below this level here, where we can see that this wick ever so slightly over here is lower than either side of the candle. So when it took a bit of that liquidity, remember I'm looking on the 50-minute time frame, we had another little reaction. Okay, and the market just keeps doing this, keeps grabbing liquidity, but the overall energy is moving towards the higher time frame liquidity. Yeah, the real price. Okay, so in my opinion, this market wants to potentially, if I was to do a path, the path may look like this. Boom, boom, wherever into this area, and then maybe we might see something happening like this. Yeah, maybe. Yeah, but either way, this is the more the stronger narrative of this market getting into these levels. All right, capturing that higher time frame liquidity. All right, now if we go to that indicator, have a look. I'm gonna put that indicator back on and think about this idea that the markets like to capture liquidity from previous sessions and then have a little reaction. Well, look, this above this here was liquidity, and we've had a little reaction. And that reaction, to be honest, it'll be nice to see it push to about 50% of this Asian session and then turn around. Okay, because I can see some reasons on a smaller time frame that the market may decide to push to that 50%. I can see some lovely imbalances in here. Okay, I can see some other stuff going on. So this market may decide to come and push it exactly where you see my candle going, to this 50% level. And can you see over here with this imbalance? The market may push down into here. Gold may do it with a quick spike. It may do that when New York opens. Yeah. And then I'd like to see this market making its way through New York or beforehand, pushing up towards this higher time frame narrative. So that's my overall picture. That's me opening the book and going, okay, I heard that this book is about dragons and monsters, and there's a hero. That's what I know from reading the back page. But then I need to dig in. I need to dig into the strategy and dig into, when am I going to get involved? Okay, when am I going to get involved in this market so that I can prosper from this idea that I may have? Okay. So don't get it twisted. The same way I'm saying that this push from here may just tap into this little area here. It may decide to run all the way down here and take Asian lows. May do. And someone's saying, well, Jay, why didn't you why didn't you sell it down into these levels? Well, you can do. You can sell it down into these levels if you can see a good entry within your strategy, but you have to understand which way that narrative is going. So let's zoom out. Let's not forget what we said about this market. What we said about this market is the market's ultimately going sideways in this big blue range, and even more so within this little red range, because the market, before it got to this red range, was making lower lows, breaking structure. If you want to see where structure is, here's structure. breaking structure, making lower lows, lower highs, lower lows, lower highs, and then it made an equal high here. So something changed between this point and this point. And we're right now at the top of that in this premium of this red box. Hence the reason why we're saying that we might see some sort of reaction. And that reaction could possibly go straight past that level, capture Asian lows, and then decide it wants to do something else, whether it wants to push up to the top of this blue range or continue making lower lows. I do not know. I wish I did know. Wish I had a crystal ball. All right. But as a day trader, what we can do is we can read and react to what the market does. Read and react. Okay. So getting back to looking at this indicator, which is called ICT Kill Zones Indicator, I believe that's what it's called. I'll check it. So I'm not giving you guys false information. Let's see what it's called. Yes, ICT Kill Zones and Pivots. Now, we've all heard about the ICT strategy and whatever it may be. And if you know the ICT strategy and it works for you, then great. But remember what I said to you, all of these strategies are the same. Wyckoff strategy is the same as when people turn around and they say they want to see, indication, correction, continuation, people that they want to see the break, etc., etc., etc. They're all the same. They're all the same versions of the same thing. Yeah? It's just whichever way resonates best with you. ICT's done very well because they put out their education, lots of it for free on the internet, long before anyone thought about doing that, which is a great idea. But remember, if ICT strategies were 100% correct all of the time, well, it'd be nuts. Maybe just learn ICT strategy, then buy yourself a small island. But that doesn't happen because all strategies have a percentage win ratio, whether that's 6 out of 10, 5 out of 10, 3 out of 10. Okay, and it's for you to be able to mix your understanding of the markets so that you can get involved. We've seen this extensive push. Boom, 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 boom. I've put this Fibonacci here just because I understand from the markets that the markets love to see 50% retracements. Not that's the be all and end all. I just know that the markets like 50% retracements from my education. So that Fibonacci there and that 50% level over here where this green line is just something for me to look out for. I can get rid of this Fibonacci. Something for me to hold in my back of my head that potentially around that area, I might see some action. Yeah, and it's just a coinky dink that around that 50% area, we see a lovely, on this time frame and others, let me select this, we see a lovely imbalance in here. Maybe it's just a coincidence. Maybe. All right. But at the same time, I'm aware of it. I'm aware that there's a little imbalance right by this 50%. We might see it wick down past the imbalance, but close within the imbalance and then start doing something like that. So if that is the case, and I'm thinking to myself, you know what, the higher time frame narrative is that this market is bullish and that I think it's going to reach up bullishly for this imbalance. And I can see that down here, there's a reason why it might push down first. When that market kicks into here, especially if, listen to me, here's the source, especially if this coincides with time. It coincides with when you see these boxes here that are on this indicator. This is London. If it coincides with when New York opens, or it coincides with when London opens, or it coincides with in time-based, yeah? Because then I'm going to be like, I can see what's going on because you want to take a high probability setup. A high probability setup is when the whole rush of people are doing the same thing, where there's lots of volume. If I saw lots of people run in Carnival running in a direction, I was on in a helicopter and I see the crowd moving, I could probably bet a huge bet on it that in the next 2, 3, 4 minutes, the crowd's still going to be going in that direction. Why? Because there's a huge volume of people doing the same thing. It's unlikely they're just going to stop like that in a minute. So when there's volume, when people are active, when orders are going in and out, when London and New York has opened and people are at their desk doing something, the moves are going to be more probable. Opposed to if there's just 2 people running in a direction, in 2 minutes time, they might decide to stop. And if they stop, they ain't got nobody behind them pushing them in a direction. They can just stop and decide to go in the opposite direction. But 4,000 people can't just stop like that within 2 minutes. It's going to take some time for that crowd to slow down. Therefore, my move to play out. Yeah, I'm using these different analogies and metaphors and letting you understand why people want to trade in these kill zones. These little yellow boxes here, if you've noticed, they don't extend for the whole session. They're only extending for what people believe are a kill zone when there's the most activity within that session. This London one between here, look, it says 2. Remember, that's 5 hours behind. So that's 7, yeah, till 4, yeah, till they're saying till like midday. All right. Oh, sorry, till 9. Sorry, yeah. This is where they're saying that this initial energy in London, they're saying is a kill zone. And same when if I go back and show you New York, is this particular indicator breaks New York up into 2 little things. They break it up into New York AM and New York PM. I think I've done something where the AM's not on here for some reason. Let me check. Let me check to see my settings if I've done something mad. No, AM's there, PM's there. Okay, maybe I just can't see it. I'm blind. All right, so that they split it between AM and PM and given a kill zone in the AM, 9:30 till 10:45 for some reason over here. All right, and then 1:30 till 3:30. All right, and you can add on your 5 hours. Okay, they've given it these 2 little breaks in here. As in, there's 2 different kill zones. Either way, let me show you how you can do your own analysis and your own justification of when there's that whole 4,000 people in Carnival moving in a direction. Shall I show you how? You're going to click here and you're going to click on something called volume. Oops, not volume analysis. That's wrong. Just volume. Where is it? Just a volume. Here we go. Let me get rid of the other one. Get rid of the other one. Look. We can see these clear spikes in volume. And these clear spikes in volume coincide with, look, New York just started. Look, boom, look at the spike in volume. Look, London just started kicking off. We got a little spike in volume here. Let's go and have a look. Let's go and scroll across. We can see when the most volume comes into the markets. Look at here. Look at this spike. Here, can you see this little blue patch? Blue is New York, for those who want to know. Yellow's London, red's Asia. These spikes, look at this spike over here. Look, pow, this is New York. Let's have a look again over here. Look at this massive spike over here. What is it? Wow, it's New York opening. So we know these are the times where people want to trade when that volume's popping. Or when London, we see spikes when London opens also, just not as much as New York. Because London's London, New York is what it is. All right? America, unfortunately, reserve currency of the world, rule the world. All right? So when there's things are popping over there, that's where we see the most volume. This is why you hear people say, yeah, they like to trade between a certain time. They want to be at the markets at about 2:30. I'd say be at the markets before 2:30 to be able to see the setup, to be able to understand what's going on, but for a couple of hours. Meaning you don't have to, if we're saying that this is the area here, have a look. We're saying that these are the areas here for high probability setups. Doesn't mean you can't make money outside of that area. But it does mean that if you have a limited amount of time where you don't want to be on the markets all day long, I'd probably say you should be around these times. There you go. So I heard something which was quite powerful. It said this: in the markets, you don't make more money by doing more trading. Let me say that again. In these markets, you don't make more money by just doing more trading. It sounds like that's the case, isn't it? It sounds like the more bricks that you lay, the more wall you build. But in essence, it doesn't really work that way. And in fact, it actually works the polar opposite way. The less trades you take, the higher profit, more profitable the numbers show that people are, which is mean that you're going for quality, not necessarily quantity. All right. So just this alone, just by having time-based trading alone and saying that you only want to trade in these areas alone, that has already restricted your time. So if I've just said that the more time you spend in the markets ain't necessarily the more money you're going to make, it could actually be the less money you're going to make. All right. Then therefore, just being able to restrict the times that you're going to trade and say that you're going to trade in these hours between X and Y. But even if you change that and say, you know what, I just want to trade Asian sessions, which is slow and calm. I want to trade, in the mornings. If you're just restricting yourself by that time alone, that alone is supposed to give you, It's supposed to give you an ever so slight edge. Hear what I just said, because I've dropped a gem for somebody that they haven't really got it. Just that alone of being able to have a time-based strategy whereby you're only going to be in and out of the markets within a certain time, that alone, by the numbers, by the stats, gives you an edge. Because you're not in the market at a time when, look, have a look at this. Look at the New York PM session, look. Have a look at it. What is it doing? Nothing. Yeah? Have a look over here at the Asian session. What is it doing? Nothing. Look over here again, the New York afternoon session. What is it doing? Nothing. Now, it's not always the case. Sometimes there's going to be some news, some other stuff happening, blah, blah, blah. But I'm telling you, this choppy action going up and down, up and down. It's a lot more likely that this choppy action here stops you out than this here at New York. Watch. Back up in here. If you had a limit order in this imbalance here, have a look. Have a look again. Have a look again. Again, falling into this little area that we want to be trading in. It's a lot more likely that that energy there didn't stop you out and run in your direction and made you some money, opposed to this hokey-cokey candy dance, 2 steps forward, 3 steps back, spin on the spot, touch your knees. This scenario that's happening in here. So for somebody, I've just given them a gem now because they think this is raw, man. I've been sitting in front of these charts all day. Well, now you don't have to. Now set your time. Say you're going to get at the charts at, 1 o'clock. Yeah, and you're going to be off in a few hours. You're not going to be on that chart till after 3 o'clock. You're not gonna. You're going to be in here. You're going to be in and out. You're going to be in for market open, around for a few hours. Yeah, maybe and then you're going to dip. Or you can trade some of these other sessions, but they are going to be slower. They are going to be a little more sideways. And therefore, you must take... have you ever found... How about this? Has anybody ever found that you place a trade overnight, and even if that trade is going in the right direction when you wake up, you got stopped out? Has anybody here placed a trade overnight, and even though that trade goes in the right direction, somehow you got stopped out? I'm sure there's somebody here who's done that. Okay, I'm sure it's happened many times for people. The reason why is a few reasons. One, overnight, especially if you're trading in US pairs, your spread's going to open up. Yeah, giving a higher chance of that spread, that variable spread that's moving like this, how the broker gets paid. It opens up. Why does it open up? There's lots of volume in the market. Try and get a haircut from your barbers when he's shut. When he's not in his chair and he's got a line of people standing there and he's charging his typical money. You're going to phone him. He's going to say, listen, bro, I'll cut you, but there's nobody here in the shop. There's no volume in my shop. So for me to go to my shop, open up, give you a haircut, I'm going to have to charge you 100 quid. You say, I need it, man. It's my wedding tomorrow. He goes, no problem. It's going to be a lot more expensive for you to get a haircut. Okay? But when there's lots of people in the shop, it's normal business hours. Yeah? Then this is what it is. I can't just charge you £100 out of the blue. He has to charge you, the going rate. Okay? Same principle in the markets. Exactly the same principle. So your spread opens up. Secondly, it's because typically over the Asian sessions, we see this choppy action. Look, this market was still going up here in this Asian session, but it was going up and then down and equal highs. And then, it wasn't going for it like this. Or going for it, making a move through London, making a move through New York. It was kind of going a bit sideways. All right? Either way. And sometimes you hear people say, and what they will determine, if the market moves over Asian session, then it will consolidate in the next session. And then the cycle moves on. If it's consolidating through an Asian session, expect to see a potential grab of liquidity, and then potentially the markets to move through London, and then potentially even retrace back and grab the other liquidity through New York. All right. So if that's the case right here, we might see London doing a little bit of a hokey-cokey in this action in this session, which is already kind of doing. And then we might see New York come, and that New York, in my opinion, may tap into this imbalance or these type of areas, depending on how we see the markets develop up until when New York opens. And then we may see this market go in for the price. And the prize is already taken this liquidity. Is this liquidity above here? And whilst we're up here, we might as well go and grab all the liquidity, tap into the imbalance. Yeah, and some of the other, look, there's an Asian session high here also. Look, right on that liquidity level where we've got this imbalance that I marked here on a higher time frame. We can also see another Asian session high that hasn't been taken. Yeah, these highs, these levels represent liquidity, and just understand that the market likes to trade towards liquidity. So this is my idea for gold. All right, will it happen today? I don't know. Hopefully, I believe so. It has enough juice. Gold has enough juice to make it happen today. It has the engine size, has the horsepower. Okay, but if is it definitely going to happen today? I don't know. Now we might have to look at economic calendar to be able to have a look at our economic calendar to see are there going to be any catalysts today that may move the market. And today is Thursday, July the 11th, and I've seen that we've got Brother Alan, the fundamentalist himself, who'll be able to give us some information about all of these red folder events that are occurring at 1:30. These things, aka CPI, yeah, is a catalyst that can make this market do this in a heartbeat. Okay, and the question is whether we're going to be involved in that trade or not. Yeah. So, Al, if you're there, I don't know if Al wants to give us a little
Yeah,
vocals.
Grand Rising, all. How's everybody? Hope everyone's
Amazing
well.
day, Al.
Yeah,
Lovely to hear from you.
Yeah, CPI today. It should be, as you said, Jay. It should be very good for the indices and the bullish for the indices and gold, and it should weaken the US dollar. Expected is 3%, I think 3.1% from 3.3%. So if it comes down even a dot, if it comes down even 0.1, it should be bullish for indices and for gold. So that is a big one today. CPI 130, and plus I think there's a few other red folders, but the CPI is the one that we need to look at. So either you are in the trade beforehand or you're out of it and watching what's happened and reading and reacting. It should be move very, very fast today, CPI. There's lots of things going on. Chair Powell was talking. He was quite boring. Reason why he was boring the last few days because he didn't want to jolt the market, because when he talks, the market moves, massively. But there's a lot of talk about cutting interest rates. However, I don't think that's going to come before the American election, because he will be accused of electioneering when actually they're just doing their jobs. Any questions, anybody, on anything regards to what's going on?
So I watched some of his speech the other day, and he was getting murdered. One woman murdered him about saying that he works for the big companies, big business. He's not working for the American people. I don't know if you saw that. She was ripping chunks out of him.
I've heard that before, Jay. I think, you know what? He's been a steady hand. I think they were too slow at the start to deal with the inflation. They were behind the curve. However, they've been a steady hand. Unemployment is trickling up in the States. However, the jobs market, I don't know if anyone saw the jobs the first Friday of the month. The jobs are overestimate. Came in at over 200,000, right? So the jobs market is still strong. So the economy is still strong. Now, if the jobs start to weaken, created jobs, right? This is about created jobs. If that starts to weaken and come below expectations, then the Fed will have to do something. But because unemployment is trickling up slowly, I think it's 4.1% in America, but the job market is continuing to grow from strength to strength, they can wait a little while. So yeah, I mean, the accusation about big business, I hear that. However, we need businesses to create jobs. There's no business, there's no jobs, So there's got to be a balance. But I think the Fed have played their hand. The last 2 years, they've played the hand really well. They did start off a bit too slow. I believe if Trump gets in, he's in for the chopping block. But if Trump gets in and chops him, we're going to have an issue with inflation. the market won't like that. So watch that space come November. I think someone asked me if a couple of weeks back if the markets if they react to elections. The French election, the first round, before the first round, yes, because Le Pen got in the Euro votes. Yes, the French market lost $252 billion. At the moment, the market's looking at the French and thinking, what are you doing? Is it going to be gridlock? Yeah. So they're giving them time to breathe until they make a decision. But with the US market, if Trump comes in and he makes hasty decisions, he's going to get murdered at the ballot box. He's going to not ballot box. He's going to get murdered in the market. So bear that in mind, and that's good for us.
Okay, there you go. There you have it. So let me ask you a question. What do you think? Do you think he's getting in, or do you think even if they tag somebody else in for Mr. Cena? I mean,
I think at the moment, yes, he's favourite. However, his financial policies are crazy. You cannot get rid of income tax and have tariffs. So, you got tariffs. So what? The other country's not going to put tariffs on you. It doesn't make sense. And that will cause a meltdown in the markets and cause inflation to go back up to 10%. So some of these things are just crazy. However, the moderates will come out and vote. Yeah, the moderates will come out and vote. And if they do come out and vote, he may not get in. However, no one's voting for Biden. No one's voting for Biden. He unfortunately, Father Time does catch up with all of us. Father Time has caught up with him. And end of the day, he needs to project strength. Yeah, that's why the Americans have not voted for a woman as president, because they are sexist and the rest of it. However, he doesn't project strength, and I think Trump at the moment is favorite. However, the market is watching. The thing about Trump, though, he's a guy who gets rid of regulation. He's a deregulation guy. Yeah, However, it's all about details. It's all about details. And the problem is these people are not detailed people. That's why they got people working for them. But Trump is favorite at the moment, and the markets are just watching. If he gets rid of the Fed, the Chair Powell, and he brings someone in that's gonna do his bidding, the market's not going to look favorable to that. So watch that space.
So the argument I've been hearing, is the fact that if we're going to go along the lines of the president isn't the person who runs the country, not even on a conspiracy kind of theory tip, just more on the tip of he's got his whole team, he's got his advisors, etc., etc., etc.
Yeah.
The argument I've heard is that it's safer to keep Biden in with his team of advisors, because evidently my man can't navigate two steps.
Yeah.
He's not necessarily waking up and dealing with the stresses. I'm going to guess it's a stressful job.
Yeah.
I'm sure his team are doing most of the work. And it seems as though surely it's his team that don't want him to stand down, because ultimately they're the people in control. Because anybody, it doesn't make sense. If you really look at what's going on, it doesn't make any sense. It's
not just the team, it's also the people that fund him as well.
Exactly. You understand what I'm saying? So the bottom line is that if you're a Man United supporter and you want Man United to win, you're Man United first, and you can see that, I don't know, your striker's not doing it, well, you pull off that striker and put another striker in that can do the job for Man United. You don't say, well, we're going to leave the striker with one leg who's dribbling, he's chasing pigeons, he's not even running after the ball. We're going to leave him there unless somehow that's what you want. You want him there because, I don't know, maybe you want to lose the match. Okay, so I'm saying that's the argument. The argument is Trump is so far left or right in regards to his ideas that he wants to do, and for the powers that be, those who fund him, etc., that there is an energy or a push to keep Biden in so that the little minions can just keep controlling the country.
You know what, Jay? I think you're right. You've got onto something there. I think that the people behind Biden know what they're doing. The people behind Trump don't know what they're doing. Yeah. And people are wary that he said a number of things. If he gets in, he's going to go after people He's going to do this. He's going to do that. Yeah, people. Listen, I'll tell you straight. Neither is fit for office.
Exactly.
Yeah? Neither is fit for office. And I've been to the States and I've had that question with a number of Americans. They're like, neither fit. Both are too old, right? And Trump is too far gone in that respect. And at the end of the day, you need someone to come in who's boring to do a job, right? And unfortunately, the Americans may stay with Biden if he stays in, or someone else comes because of the people behind them, because they will be just continuous. They will make sure things are done correctly and done democratically. However, yeah, you're right. Trump's team, man, they don't know what they're doing, bro. They don't know what they're doing.
I think it's kind of sad that the leaders of the free world, if you want to say America is the thing, are like 82 and 83 years old. It's mad. You understand?
Yeah.
So if you really think about it, like, it's true what people are saying is if that's the best that you're throwing at the world, it's sad. Remember, they got to go in there and be in there for another 4 years, yo. When you're 83, 4 years is a lifetime. By the time my man gets to 87, he's going to be talking through a machine, dribbling on himself, having somebody wiping his batty. He's going to be a mess. Do you understand what I'm saying? And not for the older, like one guy was saying, it's not for the seniors, because there's a lot of seniors that are 80. And I mean, just the reflection between him and Trump, they're only, 2 years apart? You got what I'm saying? Yeah? And unfortunately, like you said, they are different people. You got what I'm saying? In regards to physically, obviously mentally. I don't know if you've seen the latest clip. I don't know what he mumbles under his breath, but it sounds like something mad.
Not good. It's not good. You know what? It doesn't portray any. It just we're looking and thinking, what the hell's going on there?
Listen, when Putin's promo videos is him riding horse, shooting guns, bare chest.
Different man.
You understand what I'm saying? Yeah. And my man's having people help him down 2 steps.
Yeah, different man. I think listen, Putin's probably just watching that thinking, it's a shame, really. I mean, the Americans, the system is not fit for purpose. And at the end of the day, for me, if you want to be president, you need to be a senator first. Yeah, you shouldn't be any old Joe should be able to go and become president because of funding. I think you should be a senator, have gone through the process first and foremost. Then you know how the system works. Yeah. However, the issue we have is it's going to be volatile in November, which is good for traders. Yeah. Right. Very volatile. And you know what? The market's going to swing. So, as I said, a few weeks ago, someone asked me about, if any election going to affect the market. That one will.
Guys, I think I'm 100% with everything that's saying, and it's quite interesting in debate and interesting finding out. Some people like, they don't care because it doesn't affect us, etc. But it does. Ultimately, it does affect us. And one thing I think is really interesting. I watch a lot of it. I watch a lot of the stuff that's going on in Gaza and Palestine, Israel and Palestine. I'll tell you why. Because what's going on in Israel and Palestine has been going on in African countries for years. You understand what I'm saying? Yeah. The Israel-Palestine scenario is giving us an opportunity to see the window in to how blatantly these people can just disregard the rules, people's life. Supposedly, I think Palestine has just had 4 schools hit in the last week. I think yesterday there was a school hit with 29 people dead. And you just think to yourself, if this can happen with people who are not even melanated people to our extent, yeah, could you imagine the things that people have been turning their eye on? Human rights catastrophes has been going on in DRC and other places that the world's under. Like, it's mad. And just watching it, like, everyone's sitting there like, yeah, I'm just minding my business. I remember people was like, well, it's none of our business, it's mind our business. But let me tell you something. If that can happen like that to those people so blatantly on TV every single day, bruv, they decide to just roll their tanks into Jamaica or Africa or wherever it may be on Nigeria and do a madness. They are brazen enough. That they're brazen. You know what I'm saying? Like, they're not even mucking about. They're like, yeah, we know. Let me tell you the new thing that I heard, which is mad. They said basically that thing that happened on October whenever it was in Israel, that they're making their whole argument against. There was an order that went out with the Israelis to the Israeli army to shoot indiscriminately, just to make sure that quote unquote Hamas or anybody don't be able to take no hostages or whatever, to shoot indiscriminately. So they don't know. For the people that died, they don't know how many of those people died from the enemy's hands or by their own hands. Now, And then afterwards, you're going to make out that it was sort of, these people killed so many of our people, blah, 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 blah. The reality is that they don't even know. And I'm saying it's like the things that are happening in this world against humanity, like you don't have to be, from Palestine to see a baby slumped in a man's arms and be able to feel compassion. But it's just mad that it's allowed to go on. And the supporters, it just shows the politics and the mass of the world when you've got supporters wanting to arm a team. Like, nobody likes to see, even when you're watching a boxing match, after the man gets a couple claps in the corner about defending himself, the referee jumps in. Doesn't the referee jump in and say, enough's enough, bro? Do you get what I'm saying, yeah? But in this scenario, it's like just seeing a man getting, like, nobody would stand there and watch a man in a ring get his brains beaten out for 10 minutes. Nobody would watch it. People will get up and leave. Do you get what I'm saying, yeah? Like, at some point, it's very interesting the way that the world has not jumped in properly, bro. I'm not talking about asking man to stop, putting your finger up. Excuse me, could you stop punching Jason in the head? He's bleeding from his eyes. Could you stop? Not with one finger. Someone's gonna get up off their seat, jump in the ring, and physically put their body in between Jason and the guy who's hitting him to pieces. Sorry, Jay, I know you're not gonna get hit to pieces because you're the champ, but you get my point. All right?
Yeah, don't know.
You get my point. It's just weird from a humanity perspective, and it just shows that the world is very grey. This is what I like to say. The world is very grey. It's nice to think it's black and white, but it's not. All right. But on that note, not to leave you on a downer, we're going to continue looking at it. I've drawn some little smaller paths. I'm on a 1 minute time frame. Some smaller paths for this XAUUSD. Have a look at what just happened whilst we was talking. Is above this level here. Let me try and zoom out a little piece. Above this level here, you saw me put the little white line is. What did that white line represent? What does this white line represent? I'm going to help somebody out. What does this little white line represent over here?
Liquidity, yeah.
Liquidity. And as soon as you see this scenario happen, look. Nam, 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 nam. An E of liquidity. Let me give you another little bit of source. I'm going to carry on with this tomorrow. What you find is this pattern happening, all right? I want you to remember this pattern. Consolidation. Oh, let me go and do it in a blank screen. We find a bit of blank screen. Let's find a bit of blank screen. All right, this is what you find happening. Are you ready? And you can look for it yourself. Consolidation. All right. Now, obviously, we understand that this market first can grab liquidity. All right. And then what you will typically find is that when it grabs that liquidity, this market can sometimes come back down here, grab liquidity again. Our indication, correction, continuation, we are not in the trade because the market has not, done what it needs to do, especially if we think to ourselves that the market is going to be bearish. Then you see this occur. Have a look. All right. Could come down past this level, break in. Oops, didn't want to finish it there. Break in a previous structure here. Then you'll see the market come and use that area here, which is previous support, as some level of resistance, like so. And then you'll see it push past that area. Even sometimes when you see this level of resistance, you might even see it do this. Get people excited. And then you'll see the market come and push past this area. And that ultimately is where your entry is, around about here, where this market is going to go from here and fall to hell. All right. Now, even though this is me breaking it down on a micro level, this is our indication, correction, and continuation. It is, with our stop above the highs or above our last highs. It's the same. I'm just saying that there is a potential for you to be able to get in. 1 second, guys.
Your mic's off.
I've been talking to you for Give me a second. Let me just round up. Give me a second. Give me a second. Sorry, yeah, sister could see that I was talking and my lips were moving, but there were no sound. So I was saying is that this is our, on a bigger picture, our indication, correction, continuation. This on a smaller level is what allows me and can allow you, once you've mastered that strategy, to get a very small entry in here. Because in here, the market's going to do the exact same thing. It's going to indicate, correct, and continue. But after it's done this pattern. So here was a consolidation. Just remind you of it. Here was a consolidation. Here the market came and grabbed liquidity. Now, and sometimes you see it grab liquidity, and the the newbie traders just want to hit the button up here. As soon as they see it start coming down, they hit the button. All right. Remember, this is a game of taking money off you, making your money my money. So when you hit the button here, this extra little push up here stops out all these people, takes their money. Then it pushes down and it breaks the structure, our indication. On a smaller time frame, you normally find that where previous area of, remember that battlefield, we used to talk about our battlefield, you see a little resistance here, that the market comes and starts respecting it. Sometimes it even pushes down here, gets some people excited. But then afterwards, you see a kickback, maybe the candle doesn't close, kickback, taps into this area over here, and normally here you will see a point of interest. You will see a imbalance maybe over here. Have a look. Maybe you'll see an imbalance in here. Yeah, maybe there'll be a lovely candlestick zone, maybe 50%. And this is the real place where that market's going to then start to go. And that's ultimately, let me go down to my 1 minute and reset this. What we may, on a smaller time frame, I was showing this indicate, is this what he's looking at? I was looking at gold. Grab the liquidity, boom. Yeah, on a smaller time frame, we was looking in here, and I was drawing it in here whilst we was talking of the market, grabbing this liquidity, coming down and breaking some structure, some smaller structure here, because on this time frame, remember, swing lows are identified simply by any of these candles whereby either side the wicks are higher. So this was structure. You know, sometimes when I'm looking at it, and I told her, I said to you, I'm looking and I can see the structure. It's because I'm looking at that, just those points alone of being able to find a candle whereby either side we can see some of this structure. Okay. So ultimately you saw me drawing this whilst we was talking, and the market has done that. It just hasn't kicked back up into this area as yet. Okay. So maybe it's doing it, wants to kick back a lot longer. Wants to kick back from here. I don't know. But I'm a bit wary that this market might want to kick back up here, even if it wants to come down. All right. So at the moment, I haven't pointed out no trades for today. I was just been talking about this liquidity and how the markets, as you can see, whenever it captures liquidity, it runs in the opposite direction. The question is, where's the new liquidity? Where's the new liquidity pool that this market might want to go and tap into? You know, is it down here? Is it all, like I said, we've already identified this one down here and then this imbalance. And after it taps into this imbalance, I'm going to be wondering what time it is in regards to the session-based trading, time-based trading. What time is it for me to be like, oh my gosh, look, it's 2:25 and we're dancing around here. And if I see that market dipping here, then it's very, very possible, or beforehand, maybe not at 2:30, I'm saying it beforehand, I see this market dipping here, start making its way, start breaking some structure. Maybe I might decide to get into that market for the buy, placing my stop below where there's any concerns. There's another little concern over here, on the basis that this market's going to get bullish and go for the bigger or higher time frame liquidity. But I don't know. I haven't really given out a trade as such. I'm going to be watching it and giving some updates. All right, that's what I'm going to do. But guys, I'm going to leave it there. I don't want to drag it out too much, but you guys are seeing, and you're now being able to incorporate our indication, correction, and continuation confirmations or confluences that we use, but also understanding how the market loves liquid indicator, which is showing you some session highs and session lows. If I go and I'm going to delete everything off my chart quickly so you can see it properly. If we use, for example, this one, showing you the different sessions, London, New York, Asian session, and being able to see how the markets move out with these sessions. Do you understand what I'm saying? For example, look over here. The market comes up here, outside of the Asian session. We've seen a push down, grabs liquidity from below this Asian session. We see a push. Every time it grabs that liquidity, we see it moving and doing something. Have a look down here. We're getting these levels of liquidity. These levels of liquidity below New York. This wick pushing all the way down here. After that wick has done that, it's grabbed all of this liquidity. I'm expecting it to go, especially if the higher time frame narrative based upon our Russian doll is bullish. So it's just another confirmation that we're seeing. The higher time frame is that it's a bullish narrative. So when I see that happen, I want to get involved. Yeah, I want to get involved, and we can get down to quite small time frames and see the exact same thing. But guys, amazing day. Thank you for being here. I'm going to play. I'm going to play a video that we can try and learn something. I don't want to. All right, cool. So I'm going to play something which is quite interesting. I was having a conversation the other day, and it was about black people not getting married. Okay, I was having a conversation with one of my people about black people, or especially people from the Caribbean, and those type of areas, not getting married. Okay, because maybe culturally it's not something that's stressed. Okay, and I've just seen a video which looks very poignant in regards to that. It's about the link or the unseen link between marriage and wealth. So I haven't watched it, but it sounds interesting. It's the unseen link between marriage and wealth. And let's see what it speaks about. But I was having a conversation and was talking about this marriage scenario and certain things.